Thanks for tuning in to the All Funds Network podcast. Today we're here with Damon Xu, founder and CEO of One Token, portfolio risk and accounting software provider for digital assets covering CeFi and DeFi. Damon, thanks so much for joining us, man. Long time coming, so appreciate you joining us here.
Yeah,
Thank you guys for having me. Yeah.
absolutely.
Absolutely. Cool. To kick it off, let's get started with tell us about your background. Where'd you start in the industry?
Yeah, I mean, so first I'm a computer science background guy, and the first job I got is a company. They're based in Jersey, and they are a FinTech company. So basically, their client is like mutual funds, online brokerage, wealth management company, this kind of stuff. So they provide, for example, like wealth management system, option trading system, cost basis system. So what's, as a computer science guy, suddenly like step in finance industry, and that's like before crypto, that's a story. And it's once upon a time, some of my classmates, he is working in like crypto, and it's a very booming market. Everyone have a different, history to working crypto, but it's like classmates relationship bringing to this market. And, step by step, we do have like our network in the crypto ecosystem. And very early stage in Asia, there are a lot of miner, before this like regulation, this kind of stuff, many miners in Asia. And I would say something around like 19, something around like 20. That's a timing the big miners, they are not only like do long position, because basically when you do mining, it's like a different way to do the long position, right? You buy the mining machine, you dig it the coin. So at that timing, they begin to think about asset management. So they not only want to hold BTC, but also they want to generating yield. Very early stage. And one of our friends, which is I would say kind of big guy, they have like they use around 10K BTC to do like, today we name SMA allocator. At that time, there's no this kind of name. So they invest the coin, the money, mostly like is in BTC. It's not a lot in USDT, but they like invest the money to, I would say, more than 10 trading teams. And they begin to have like headache. So how to manage the portfolio, how to manage the risk, the real-time risk, not to mention the money in, money out. You don't want to the like net asset value like a pop up, like go up suddenly, go down suddenly, right? So they need a system. Definitely, they need a system to manage their whole portfolio. So I would say that's a start. That's a start when and why we decided to make institution software for crypto asset management, this ecosystem. And even today, I would say allocator is our main client profile. So yeah, I would say that's basically the history why we step in crypto, why we started One Token.
That's very cool. So you got up to that point. So once you started One Token, just maybe talk to us about how that evolution, how it started, how you kind of built the infrastructure, the types of clients maybe early on that you focused on, and what you're kind of doing today. Maybe that'll be helpful.
Yeah. Thanks for asking. So I would say, like example I just made for the miner. Suppose today, I mean, let's say Skyler. Suppose you are the very rich guy. Okay, you have the BTC, you have the USDT, and quant strategy can help you to generating yield. And then now we have Mike and Damon, me, to pitch you. Say, Skyler, we do have good strategy. We do whatever like arbitrage, we do CTA, even some guys say we do DeFi strategy very well. And in that case, what you have is a deck, right? And what you need to figure out is several things. First, you need to do delegation, whether our strategy is really good or not. So usually we see that's like a pre-trade things,
right?
Pre-investment things. Second, when you do invest money, to our strategy, for example, SMA way, then you need to monitoring. For example, Mike tell you, say, his strategy is market neutral, 724. But hopefully that's true. But you cannot trust like 100%, right? So you need to monitoring whether his like perpetual swap position and a spot position or even options position is really like market neutral, right? And probably he said to you, say, okay, his performance, his P&L is not rely on super high leverage, super crazy margin. But also you need to make it sure that when you do investment, when running the strategy is running as what he told you. So during the investment, you need a system to like real-time monitoring the position, the exposure, the margin, the coin centralization, everything. And I would say that's typical in the very early stage for allocator, what they care about. But with more and more regulation, people have to working with, for example, fund administrator, fund auditor. So in that case, no matter like allocator or trading team themselves, they will set up fund structure. And in that case, they can not only care about front office, they have to care about middle office. I believe, Skylar, you know everything about that, right? Yeah. So in that case, they have to have a golden copy system to track everything they did, every activity to influence the balance. Anything activity, they need a system to track these transactions, no matter it's like trading or funding fee or airdrop or the money in and out, no matter between one strategy or cross strategies, one venue or cross venues. So before it's like pre-investment and during the investment, and then step by step is like a post-investment, like post-trade, end of day. So they need a middle back office system. Right. So I would say that's a journey for us. We go with the market. No matter allocator clients, trading team clients, prime broker clients, or even today, because more and more fund administrators go to this market, more and more auditors go to this market. The reason why they come is because there are more and more funds, and many of them are quant. So even fund administrator, fund auditor, they need a system to work with their client, right? It's better for fund administrator, for fund auditor to get the detail, the transaction, this information from the venue, not directly from your clients. It's a little weird. It's like a compromise, but it maybe happens before, but I believe after 3 years, 4 years, definitely, everything direct from the venue. So yeah, I would say that's a journey, and that's what we are focused now to support the whole ecosystem, crypto asset management ecosystem.
Very cool.
Got it. Yeah. So to summarize it, you guys are helping with the tracking the trades, tracking these investments, and making sure that the numbers match up at the end of the day, really.
Yeah. Right.
Is that so that's a portfolio management system, or PMS for short? Is that portfolio management, or is it full general ledger as well from an accounting point of view?
Yeah. I mean, I will say for first, it's a little blur for even in the traditional. You ask for some traditional vendor guys, say, what is portfolio management system? Right. So Geneva will say they are like portfolio management system. SSC technology guy, they will say they have this kind of system. Bloomberg the same. So in my definition, what we focus on is that we know how to analysis a portfolio, and what's the historical performance, what's the real time, what's the transaction, even like a rebalance. How, for example, if you invest like a multiple strategy, whether there's a better way to like consider about the correlation, the optimization about the portfolio. So that's like the portfolio that we mainly working on. But with more and more our client, they go to regulators. They need like a middle office things, like realized, unrealized P&L, first in, first out, last in, first out, net asset value, accrual, this fee, this kind of stuff. We support it. But there's there's a place that we don't want to touch. For example, like a purely back office, like transfer agents,
Yep.
like generating the profit sheet. I mean, I'm not like CPA background guy. We're
Right.
not technology, a little finance background. So we know what we can do and we know what we cannot do. So in short, definitely we name ourselves as a PMS.
Mhm.
So that's why like a portfolio risk and accounting. So that's 3 keywords.
Great. I appreciate the distinction, and obviously for all of us here, we experience the pain of if the new asset class, crypto, for example, in back office or middle office, has always been painful with these legacy systems out there because they don't exactly fit into the category of what it needs to do. So that's why which is pretty amazing what you guys are doing to solve for this, right? But yeah, that's great how most fund admins or other folks are using separate systems for digital assets.
Yeah, exactly. Now we also connect to this traditional fund administrator software because, like I mentioned, we touch the portfolio. We know how to capture, analysis the crypto native things, but we don't want to touch like these like very back office things. So and in traditional, they're already good software like Praxis, like Geneva. They're already taking care that part. So we only need to like connect with these guys and make sure that our clients is happy.
Yeah.
Tell us about like the gap that you saw in the market. As you guys were creating your product and development.
You mean the gap for on which specific area?
In terms of like the gap that you guys saw like when it came to portfolio management systems.
Yeah, I mean, I would say there are several dimensions to digging this topic. If we, let's say from the very beginning, if today, Mike, you are a crypto guy, or you're from traditional, you new to the crypto, and for example, you do quant. Today, yes, you have one token, but if we're talking about like 3 years, 4 years ago, what you have is exchange. You can see your position on exchange, uh, and nothing. So you only have like traditional this software to support you to do this like, asset management strategy. So I would say on the infrastructure part, the biggest one is that for example, for allocator, they need a tool to help them to track, to analysis their portfolio, their investment. So I would say that's, in my understanding, for software things, that's a big gap. And for strategy wise, I would say, to be honest, every strategy today in crypto, you see, like for example, like a funding rate, like CTA, like long short, what else? Even DeFi yield farming, you can see that's totally the same in traditional. I mean, we like today, of course, funding rates is definitely like the base of the market. If you're talking about like a 10 team, they're doing strategy, I would say 7 of them or even 8 of them, they would say, okay, we have funding fee strategy. And in the funding fee, if you're talking about, for example, crypto markets, 4 years ago, 5 years ago, before BitMEX, they have their perpetual swap. There are also many guys doing like a future spot arbitrage. I mean, the key, the essence is the same. No matter it's a perpetual swap arbitrage, future or spot arbitrage, the essence is the same, and it's very popular, very in traditional. They also have this kind of strategy. So I would say, on a strategy wise, the gap is that for traditional guy, they go to this market, they need to figure out, okay, what's the venue? Where is the trading team? And in crypto, what's something special, especially like in the risk management? For example, how to what's their view for the counterparty risk? I mean, in traditional, if you're working with CME, you don't need to care about like 1.5 billion hack, right? So, I mean, hopefully, it's really awesome. By the way, it's really awesome. They survive it. But what I want
That
to say,
is, yeah.
Yeah, what I want to say is
Perhaps
that
Bybit.
right. Amazing. I mean, very impressive. So they care about counterparty risk. They care about some like special or specific crypto native like surprise. For example, you do arbitrage on two exchange, and you want to, one is like long, one is short. So sometimes you need to move money from this place to that place to ensure that you have enough like the margin, you don't get the margin callings and stuff. But
Yeah.
in traditional, you don't need to care about the latency to transfer, right?
Right.
At least the latency will not be like days. But in crypto,
Right. You're working on chain, right?
the on chain, it's really like take huge time, especially like something like 2021. So some arbitrary team, they literally like waiting to die. So and before that, I would say some of them, they will have the sense, okay, we need to care about this kind of risk. But risk of things is, in most cases, you don't know what you don't know, right? So I would say they're on the strategy wise, on the investment wise, there are some gaps, definitely. Counterparty risk, position risk, or on-chain this kind of risk. That's at least these are the gaps that I can observe.
Yeah, no, those are great points. And I think too, talking about obviously crypto operating in a 24/7 environment where there is no close like a traditional stock market, creates some interesting dynamics as well. And using your technology to kind of to integrate with the array of risk metrics, VAR
Yep.
calculations, risk reporting, guideline monitoring, other things that maybe happen from maybe more from the CTA perspective, but all these things are interconnected, as you point out. What is happening on your side is still happening in the traditional sense. Just
Yes.
what the names maybe are different and processes are maybe a little bit different, right?
Yeah, exactly. And even, I mean, even DeFi. I'm not sure what's your guys' view, because like DeFi summer, there's something new about AMM.
Yeah.
But in my understanding, AMM is like you do market making before in traditional market, right? So for example, Skylar, you have market maker strategy, but you don't have the money, you don't have the coin, you don't have the BTC, you don't have the USDT to put on the order book, right? Maybe Mike have the money, so Mike give you the money, but Mike will charge you to share the profit, right? So in that case, Skylar, you wrote an AMM strategy, and then Mike is the liquidity provider, is the farmer to give you the capital. The only difference is that your strategy is private. It's not like an open source, and it's not like for everyone. And maybe there are only 1 to 2 Mike, 2 to 3 Mike can invest, can enjoy the strategy. But in AMM, it's more like for everyone. So, but the whole logic is the same, right? Like the structure about the market, different players. Someone wrote the code, someone invest money, and there's a counterparty in the venue. The structure is totally the same.
Yeah, definitely. You brought up something earlier, Damon, about obviously crypto through either a fund structure or SMA, right? And obviously in the industry, there's a lot of different strategies of fund of funds, fund of managers. It's always hard to track and segment out each trader and what they're doing from a technology point of view. Let me talk about how you guys are solving for some of the nuances with SMA versus fund aspect.
For those listening, at SMA, separately managed accounts.
Right.
So first, I think that's the question, even in the traditional. In traditional, if I have some broker accounts and I do have some money, there's 2 ways, right? I can put money to the accounts to Skylar U, or Mike have a fund, I acting as a limited partner to invest. So I would say it's both traditional and a crypto question. But the interesting things is that in crypto, exchange, the infrastructure are good. So they help everyone. It's like easy to do SMA. And in the very beginning, when the market is really early stage, not that trust a lot, I would say for investor, they prefer to see the money is in their own pocket, is in their own accounts. That's first things. And the second, like I mentioned, for investor, if I do SMA, which means the account is under my name, and I can see every activities. So in that case, I have the control. I can have very clear idea. As long as I have right tool, like one token, right tool, I can monitoring everything, make sure everything on the track. So first, the fund security. Second, the strategy security. That's the biggest two reason why people choose SMA for investor side. And then we're talking about the fund structure side, the manager side, the trader side. That's another interesting point, is because suppose today I was a manager. If I want to serve my clients, SMA is very light. I don't need anything, these structures. I don't need to go to Cayman. I don't need to have some lawyer. Probably I need some lawyer to have like light agreements, but it's much lighter than a fund. So it's very nature in crypto. I would say no matter crypto native guy or even though some traditional guy, they go to crypto, they will choose SMA as a start. Something like trial for their own business. And only some guy really like it big, like ETF guy, definitely they cannot choose SMA, right? They go everything regulation, fully fund. So no matter on the investor side or the manager side, they have the reason to working first with SMA. But that's like the start. When suppose today, like Skylar, you're a manager, you're working with me and you're working with Mike, you only have 2 clients, right? So we give you, let's say, less than 10 accounts, right? Because for each of us, Binance accounts, OKX account, Coinbase accounts, perpetual swap account, spot account, right? So at all, maybe each of us give you 5, 6 accounts. So at all, it's 10. But if you have 50 clients, then you will have huge amount of accounts to manage. And it's not like only software things, but also, let's say today you have an opportunity in one exchange. So you have 50 guys hungry for the opportunity. So what's the pipeline? Who is the first one? Who is the second one? I mean, there are some, with more and more your clients, you will have pinpoints. So that's why first, for this trading team, they will raise the threshold. Say, okay, before I can take 200K, now, sorry, I only take 1 million. Some of them, they even say, I only take 10 million, 5 million, 10 million now in the market if you go SMA. So they take SMA, but they want to make sure that the amount is not too crazy. So with the market evolve, there must be some like institution managers, they go for fund. So easy for their manage their clients' money for their daily operation. And meanwhile, down the road, when really big like pension fund, they work in this ecosystem, they want to check what's your guys' historical performance. And if you everything is like SMA, you have to talk with your investor. Say, can I use your accounts to show the records to my potential investors? And your potential investor will challenge you. Say, it's not accounts. Well, what did it mean? Right? So, I mean, there are the evolvement for the markets. But I would say the same as a traditional. A traditional, if you're really wealthy guy, you can work with a fund. Even though they have a fund structure, you can work with them with SMA way. So, and for the bigger fund, they will take less SMA. Smaller fund, they're willing to take more like SMA to be nice to the investor. So that's my idea for the fund and SMA, this topics.
Yeah. Appreciate you diving into that for us. Let's talk about DeFi. What are you seeing on the institutional DeFi side of things?
Yeah, I would say the timing is something. The beginning of last year, we have more and more institution clients, they go to DeFi. So before they allocated their money to CeFi, But usually DeFi, with a reasonable risk about DeFi compared to CeFi, DeFi has higher yield. So especially for CeFi, if even like recently, CeFi the yield is really bad, funding rate is really nothing. There will be more guys go to DeFi to generating yield. So there are for really big institution, let's forget about like MEV trading, this kind of stuff. For decent institution, the majority they're doing is like staking, put in the AMM, borrow lending, or something like a Pando to the yield or like a yield product. So we see the trend that more and more institution, they allocated some money to DeFi and generating the yield. And the one thing is interesting is that I'm not sure whether you guys are aware of, in CeFi exchange, now they have more and more, like they name it like a fund platform. So they were listing some trading strategy on their website, like CeFi website. And then that's another term in DeFi named vaults. So basically these like DEX, they will invite some like managers. They say vote providers. So basically the vote provider will do the strategy and they will publish their strategy on these DEX. So another name of a fund platform. But the key difference, very interesting point, is that for these vote players, when they provide strategy, for the investor to invest money in this vote, the investor, no matter you invest $1 or $100 or 1 million, you can all see every activities. So it's slightly different with CeFi, because CeFi, we have SMA, right? If I invest money through SMA and my account to Mike, I can see Mike your activities, but that's only me can see that activities. But on that part, on DeFi, on the vote, everyone can see your activities. So it's probably, I don't think this like really decent, really like fancy strategy guy will put their strategy, because everyone see then means usually mean they're no alpha, right? So it's like
Right.
you probably can have like a nice beta, but for alpha guy, I don't think they will do in this way. But it's a nice way for everyone to enjoy the yield. It's very public, so no matter it's really small retail or bigger guy. So but in short, yeah, definitely we see the trend. The institution come to DeFi market. It's like institution 5 year ago, 4 year ago, institute begin to come to crypto, to CeFi. So that's the same. Like another like cycle.
Yeah. Yeah. Makes sense. And I guess from your guys' from One Token's point of view, what are you guys doing relative to DeFi, whether it be with software related or just infrastructure, other things that you guys are
Yeah. I mean, although I saw that's a start of another cycle, but I don't think DeFi today is like as mature as CeFi when serving institution.
right.
So the pinpoint that we see today in DeFi for institution, I mean, definitely first they need someone to tell them the counterparty risk, this kind of stuff. But for One Token, what do we focus today is that we want to help our clients after they have already made decision. They want to invest to ABC protocols, pools. We help them to better understand their portfolio. So for example, it's a very typical guys. What they do is they do Lido first, Ethereum from Lido first, and for example, like Ether 5 second. So Lido STETH go to Ether WEETH, and then put Ether go to Pando, right? So which means you have like 3 nested one.
Yeah.
And now for portfolio manager, they will have a question. So, hey Damon, what's my P&L for each of them within the last 1 month? And then they go to the website. They can only see now what's the balance, nothing. So what happened history? No. So history is missing. Second, they want to know what's my P&L for each protocols because it's nested, right? But you can only see your P&L in Pendle, so they don't have the idea for each of them. And a third, even though in Pendle, even though, for example, in these stacks, your P&L change, your balance change is because of many things, not only one thing: increment loss, reward, interest, trading fee, airdrop, or your coin itself, like price go up, go down. So you need to know why. You need to do the attribution. But now today, there's no one doing that. So which means your portfolio manager cannot do performance attribution. Your accounting manager scratch their head. So what I can do with accounting things, right? So that's what we are working hard to make sure our clients can really to understand what happened for their DeFi portfolios. Not to mention, some of them is very nature. They do AMM on DeFi and hedging the risk on CeFi. So they need two leg together to see, okay, what happened to the whole portfolios. And many of them, they cross the chain, even lending, borrowing, they'll cross the chain, cross the protocol, cross the pools, and they will take some money out from one pool, put the money to another pool. But that's the whole is one strategy. But today, there's no system helping them to track all the role, all the transactions, like the chain, right? So they need that's what we are working on. And I would say it's a must-have for this institution market if more and more institutions go to this market.
Yeah, makes sense.
Definitely. Coming from the accounting side, definitely could relate to a lot of these, challenges in the space for sure.
Definitely.
Talk to us about some of the risk monitoring tools that you guys are working with.
Yeah, I mean, like I mentioned in the very beginning, for risk management, there are usually like a several stage. First, you need to make sure that before investment, the guy is really good one. Before, I think the mainstream way for investor, for allocator, is that, for example, Skylar, your strategy is good. Okay, I trust you. I give you some small amount of money. Yeah, it is okay. But more and more institution, for example, like 1 year ago, there are first a state fund. They told me, say, Damon, we need your system not only for real-time monitoring their in-house strategy, but also because they are a big pension fund and they want to pitch the pension fund. And the pension fund asked the trading team, say, you guys need to have a report. Use the report to describe, to attribution, how you make the P&L before. What's the P&L is coming from this exchange, this strategy, and what's the leverage you guys use, and what's the coin centralization. If you do funding rate, it's like bigger coins or smaller like altcoins. So they need to like really break down this historical performance. And I would say that's a very mature way. So before you do investment, you don't only trust the deck, but also you really check what's the P&L is coming from. That's one thing. So, and second, during the investment, I mean, different strategy, you need to care about different things. And today, the very mainstream is like market neutral strategy. So no matter it's like CeFi to CeFi, DeFi to CeFi, CME to crypto native exchange, or like ETF share to like crypto spot or crypto perpetual, you need to make sure that as long as the strategy you invest is in different place, you need to make sure that your tools can track, can connect these places, and then to monitoring these real-time risk parameters. And I would say that's for the rest of things is the top one. And actually, like recently, I would say recent 3 to 6 months, we have more and more our clients, because many of our clients, they are trading team, they are allocator. And they will ask us, say, hey, Damon, what's kind of, for example, funding rates, they are doing funding rate for this kind of performance, then they're curious about what's the market like benchmark, what other guys doing, what's other guys average, like average margin, what's kind of a coin other guy they choose to do the funding rates. So we got more and more this kind of question. In the very beginning, I answered the question like one time, two times, and then one idea come to my mind. What about we do something like a benchmark? We do something like index. So it was very interesting, very awesome. So we work with 6 trading team. Each of them are decent guy. I would say each of them, their size is more than 300 million. And in quant, it's not like ETF. It's not like buy and hold. So active trading strategy. Each of them, they have decent AUM, decent size. We work with them to generating a benchmark report. So let the whole market understand. So for funding rate strategy, what's the average PNL? What's the range for people for this trading team to use? Because some of them they use high leverage, some make sense high leverage, not crazy one. Some of them is like a more conservative, and what's the coin they choose? And some of them they use like cross venue, some of them like only in one venue. So we issue the reports, we issue the benchmark to the whole market to help I would say, especially for 2 profile reader. One is someone new to this market. Okay, they know someone tell them that A strategy, B strategy, C strategy, but they don't know really the detail. And even though they're talking about the trading team, they want to know what's the key indicator, what's the key parameter they need to ask, they need to be aware of, right? And the second is for these guys, even though the OG in this market, not everyone has big network. So they want to take a look about our report, our benchmark to understand the market. And I would say that the biggest reason that this trading team they would like to share with us, because they know we have a big network for crypto asset management, this ecosystem, and then we help them to send the benchmark, the report to, I would say, like 4 or 5,000 people in crypto institution this market. So it's like a win-win. It's like they have their branding. We help them to let many guys to know this name, but in the same time, we help the market to understand these indicators and these key informations.
Yeah. Any big takeaways from your recent article?
Sorry, what do you mean like a big takeaway?
It just in terms of you guys recently, like the fee funding arbitrage article, like any takeaways in terms of like relative performance or
Yeah.
General points that you guys noticed, like across the board,
or interesting trend
Yeah.
that you saw. Yeah.
Yeah. I mean, first, there's one I don't want to disclose the name, because even though in the benchmark the reports, we will show the names, but we will not say, okay, this guys use this coin, that guy use that coin. We will say a range. Okay, so I want to make it like a privacy. But
for sure.
some of them, they will have their view, say, okay, one coin may be very interesting. For example, like a Doge coin, like back to like the the fourth quarter. So some of them, they will have really high percentage of Dogecoin. And meanwhile, for the whole like a PNL, the curve, I would say it's generally it's a go with the whole market. Go with, it depends on, if you go for big size coin, BTC definitely the funding rate is less than, for example, the other coin, the Doge one, right? But
more liquid.
Yeah, right. And if you go to like a smaller exchange, the funding rate is higher, because the funding rate, the key is that as long as you have enough, I don't know whether it's the right word, it's like a gambler on the perpetual swap. No matter that the market go up or the market go down, then you can have like very sweet funding rate. But if the market is everyone institution, I'm sorry, you need to walk away. There's nothing like a funding rate. And what else? We do see some guys have different way to not only like rely on the margin, not only rely on the big and the small coin, but also they have, for example, I'm not sure whether you guys are aware of like in Binance, there are like BN Solana. So which means you
Like
can
the pairs.
yeah, it's like a wrap coin. So it's like a WETH or WBTC, whatever. So in Binance, if you put your Solana to stake in Binance, and Binance will give you like a BN Solana, and then they have a spot on BN Solana, which means you can do funding rate strategy, and then meanwhile you can enjoy the staking yield as well. Of course, there are some unpack um, depack risk, right? But there are some guys. It's like ETF and a BTC, right? One day I hope it will not happen, but one day some like a big ETF issuer they have some issue for like the custody, the security things. It will also unpack. So if for someone doing like ETF and a BTC provider swap arbitrage, they will suffer for unpack. But there are some interesting way to like enhance your funding rate strategy yield. I mean, in addition to that, of course, you can not only like margin on the provider swap, but also you can go to the exchange, you can go to prime broker, as long as you're like the raising the money, the cost is lower than the return, then you can enhance your another part of your return. So yeah, I would say overall, we see the whole markets 80% to 70% guy, they are conservative because when you do funding rates, it doesn't make sense you use super high leverage because when if the investor really like high risk appetite, they can go for long short strategy, which I tried before, but it's not very good for me for that period. But you have like a long short, you have CTA, and of course you have like DeFi yield farming is usually like a higher than the CeFi funding rates. So for funding rates, as our the first article, I will say majority guys like want to make sure the money is safe, not super high leverage, and especially when someone they do funding rates on like altcoin, smaller coin, because for mainstream one, you will not expect the perpetual swap is super high and the spot is nothing. It's a different, no change. But if we're talking about really smaller coin, there are some market maker. They will do something like weird. So unexpected, like the spread will go really big, and you got liquidation. So I would say, yeah, that's my takeaway about the whole articles.
Yeah, it's awesome. Yeah, thank you.
Very cool. Any kind of high level question, Damon? Any use of AI? Obviously, that's a big topic for everybody these days. Any use of AI in your technology ecosystem, or maybe the clients that are using it? I'm just curious.
Yeah, I mean, it's a big topic, right? So on our side, I would say there's different tier, different aspect that people like in my company that using AI. First, I would say today I use half the Google as before, right? And in my dev team, they use AI, definitely helping them to do the development.
Right.
And by the way, I even use AI to do a small game for my daughter, like several months ago.
Cool.
And I like to do these kind of things like for years, literally years. I'm computer science background guy, but I didn't touch code for almost 10 years. So I have some idea I want to do something, but uh, it's the name of cursor, right? So the cursor, it's really helped me to write a code. I didn't touch code anything, no one line code, no.
It's amazing.
And just like a talk with the cursor, and then make a very interesting game for my daughter to learn English. So, but for my company, I would say first it's internal guys using the AI. But meanwhile, because in my company, we do have our like global team, the state, the UK team, but we use online pitch, online marketing a lot, LinkedIn, this kind of stuff. I would say today AI is like helping us to reduce many of labor work. To see, for example, if I check some website, say whether the website is my client profile, before we have to read, but probably down the road we don't need to read, right? It's easy to scan, easy to figure out the information. So I would say, I to be honest, I didn't see this kind of right tool existing in the market for B2B, for marketing, but it will be there. And then now, because we, for a software company, as a founder, as computer science, we will do by ourselves. So
Yeah.
even though there is not mature like tools for the like online marketing, sorry, we in-house, we do this kind of tools to enhance our marketing efficiency. And for product wise, yes, we are thinking about whether we can do some agent. Like literally, like
Yeah.
2 days ago, 1 day ago, one client visited our office. They're talking about, say, how to um, they use our system to manage their not only like portfolio but also the money flow in, flow out, and to make sure the accrual, this fee, this kind of stuff. So we say, okay, if you want to manage that part, you have to spend some time on the system to track this one, track that one, because we cannot connect to each bank, right? This must be something like in and out. You need to like manually input in the system. And they're talking about, so Damon, whether you guys can have some agent, and they don't need to the learning curve. They can talk with the system. We are thinking about that. I would say it will not surprise me for a system like us after like 3 years, 4 years. We do need to take care many things on the ground, but for the user interface, clients will talk with the system, say, I want to this kind of curve, please make this kind of curve for me, right? So this must be a trend, a very interesting journey, and we are go with like our system designs go with the market. Now on the AI side, that's the same. We go with the AI market to see what they can do. We don't want to like too urgent. We are not the AI company, right? So it's very. I talk with my CTO about this topic. Say, if something today need to take us like, for example, 1 month to digging deep to figure out whether it can help us, or the cost is like a 1 month, people like a 1 month's time. After like a half year, maybe it's only like 1/3, right? Also 1/5, so 20% time. So no need to be super urgent, but we want to make sure we know what happened and what we can leverage.
Yeah. Obviously, all about leverage, time, and output and efficiency, right? If you can lower your
Definitely.
time, your development team, it only takes them 10 hours to do something. Now it only takes them an hour. Well, that's huge savings to the development team, right?
Yeah, absolutely.
Yeah, that's great. Very cool.
Awesome. Well, Damon, this has been a lot of fun. Really appreciate you taking the time joining us today. Where could people go to connect with you and learn more about One Token?
Yeah, I'm happy to visit my LinkedIn, Damon Xu, and definitely our webpage, onetoken.tech. I think that's the two places I can easily to talk with everyone that's interested in our business or interested in crypto asset management, this ecosystem.
That's great. Well, like Mike said, this has been great, Damon, and we'll make sure to include all that in the show notes as well.
Thank you so much. Thank you so much, Skylar. Thank you so much, Mike.
Awesome. Thank you,
Thanks,
Damon.
Damon.